All right, folks, we're getting started. Thanks so much for coming. By the way, how many more days before Christmas? It's 46. Who's counting anyway? But thanks everyone for coming. My name's Rob. I organize Idea to IPO. We've been holding events in Silicon Valley for many years. We hold events multiple times a week from San Jose to San Francisco. And we always have a busy calendar of events. I'd like to highlight two events that are coming up. Wednesday, November 15th, how to successfully pitch to investors and get funded, featuring angel investor Gary Jinks. That's going to be at Mindrome in Santa Clara. Thursday, November 30th, right after Thanksgiving, the 10 Commandments of Raising Venture Capital. That's going to be up at San Francisco at Google Launchpad, featuring Steve Hoffman of Founderspace. That's not a movie, it's actually a presentation. Anyway, so check out the details for all those events and all of our events on our website, idea2ipo.com. We were launched on February 1st, 2010. At that time, we had no members and no events on our calendar. At this stage, we have over 55,000 members among all our meetup groups in the Bay Area, and we've completed over 1,815 events. We're the most active, most prolific startup event organization in Silicon Valley, bar none. Thanks, I appreciate that enthusiasm. Our mission is to promote entrepreneurship, support entrepreneurs, build community, and provide value in the Silicon Valley startup ecosystem. So to that end, we provide content that's practical, actionable, and relevant, stuff that you can actually use to succeed as entrepreneurs. We believe in building community because Silicon Valley is an aspirational ecosystem, and it attracts people from all over the world who come here to do great things. Who here is not originally from Silicon Valley? Who here was born and raised in Silicon Valley? Congratulations. Welcome. So whether you were born and raised in Silicon Valley or you just arrived last night, it's important for us to provide multiple channels for you to meet people, build relationships, and grow your network. In addition to the busy calendar of content-oriented events throughout the week, we also have some social events. So we have a TGIF mixer, that's thank God it's Friday, every few Fridays, and the next one is November 17th at the Hyatt Regency Santa Clara, 8 p.m. to 11 p.m. So you're all invited, check that out. I know you guys are usually busy on Friday nights, but just in case, we have that option for you. With regard to value, it's important that we provide value at each and every one of our events. Not just value for your money, which is important because we know many entrepreneurs are struggling financially. So we make sure that our events are affordable. If you cannot afford the cover charge, for whatever reason, come talk to me and we can work something out. And at each and every one of our events, we make sure that we have a decent buffet meal. Was this a decent buffet meal?
Yes.
Well, again, thanks for your enthusiasm. But by the way, I want to thank Royce Law Firm for sponsoring that decent buffet meal. So let's hear it for Royce Law Firm. Although I personally went to Costco, Subway, and Taco Bell and picked up the food, so.
So let's hear it for Rob.
I deserve a little credit for that. More importantly, though, at each and every one of our events, we wanted to ensure that you get value for your time, which is your most valuable resource. Is anyone here getting any younger? Besides our moderator? So when you invest your valuable time and come to our events, we want to make sure that you maximize your ROI. We have many partners that help us do what we do: law firms, venture capital firms, angel investor groups, incubators, accelerators, colleges, universities, lots of other players in Silicon Valley. Tonight, we're grateful to Datati Digital Marketing for hosting us at this beautiful venue. Is this a beautiful venue? So let's hear it for Philip.
Thanks, Rob. I'm Philip Goldworth. I'm the CEO here at Datati Digital Marketing. We help small and mid-sized companies with their marketing strategy and marketing automation implementation. We also deal a lot with content, so we have a photo video studio that's on site that we use for providing content that's relevant today, which is a lot of video content at this point. If anybody's got any questions about, if you think you might be ready for, help with that, happy to talk to you after the rest of the panel has finished their discussion. All right, thanks, Rob.
So though our local mission is to support entrepreneurs here in Silicon Valley, our greater mission is to democratize entrepreneurship and innovation all around the world. So to that end, we have a robust YouTube channel, youtube.com/idea to IPO. So check it out. We have tons of videos, and we've documented and archived many, many of our events. And this rich, valuable content is available on demand, anytime, anywhere, totally free of charge. And yes, we are videotaping tonight's event, and will be posted to our YouTube channel in a few weeks, so check it out. So here's the schedule for the rest of the evening. We're going to go right into our panel discussion. The panel will have their discussion, and we'll take no questions from the audience. And at 8 o'clock, we're going to open it up to questions from the audience. If you have a question, we'd like you to come up here, use the microphone, and we'll try and take as many questions as possible. At 8:30, we'll end the formal program. You can stick around, talk to our panel members one-on-one, enjoy the delicious buffet, and network, socialize, and connect. So at this point, I'd like to pass it off to our distinguished moderator. He is one of the top corporate attorneys in Silicon Valley. He's actually an iconic figure in Silicon Valley. He's everywhere. He's at conferences, meetups, social events, and he's passionate about helping entrepreneurs succeed. Let's give it up for Roger Royce.
Okay, thanks, Rob. So I'm standing in. Louis C.K. couldn't be here tonight, so I'm taking his place. He's not making any more public appearances. So financial technology, according to Wikipedia, it's also known as Fintech. It's a line of business based on or using software to provide financial services. That's one definition. I'm going to ask our panel for another definition in a little bit here, because tonight our panel is all about Fintech. We had a pretty good discussion beforehand earlier, and I'm coming to learn that Fintech is a lot broader than I certainly thought it was before. Our panel consists of Kartik Gada. He's got 20 years of experience in investment banking, currently at Woodside Capital. F. Lindenbaum, he's founder and managing director of Advanced Ventures here in Silicon Valley, a venture capital fund. Ram Jambanathan, SVP and managing director at SAP.io. And finally, Jace Sajnani, who's an investor with NEA, focused on the technology sector. So I thought what we would do here tonight is first I'd like to give our panel an opportunity to introduce themselves, talk a little bit about who they are, what brings them to the area, and I'd like to hear your definition of FinTech as well. And then we're going to launch into a discussion of a handful of topics around FinTech. And like Rob says, at 8 o'clock, we'll turn it over to the audience for some questions. So hold your questions till late and think of some good ones. So Kartik, why don't we start with you?
So Kartik Gada, in addition to my investment banking M&A duties at Woodside Capital, I teach a class I teach two finance classes at Stanford. One is options and futures and artificial intelligence applied to those, as well as economics of new business models, including fintech. And I've also written a book about the monetization of technological deflation and kind of solving the problems that ICOs are trying to solve. But before anyone talked about ICO, this was in February of 2016. And to me, fintech is about any automation of a financial transaction, service, function, or value add that can be done in a much faster and more efficient way than done through traditional metrics. Many aspects of financial services are 40, 50, 60 years behind the times or unchanged since that time. That's why it's very ripe for disruption. It's happening in 10 or 12 different areas. While cryptocurrencies are in the headlines right now, I still say 85% of fintech is outside of that.
Hi, I'm Ethel Lindenbaum from Advanced Ventures, and I'm a recovering entrepreneur. So all of you out there sat in that chair. I grew a company in the late 80s and 90s through Silicon Valley, exited in the first dot-com boom. I don't know if anybody here remembers that. Everybody looks pretty young out there. And started Advanced Ventures with a couple of partners in 1999. We've invested through 3 funds and have always been active in this category called Fintech. We've been really lucky over the years to have some meaningful exits, with Perigo being acquired by Blackhawk Networks, in terms also companies like Merch Engines being acquired by Deluxe. We've been investing in this, as it was just explained, the broader financial tech space, and we consider that to be much broader than the things we oftentimes think about, like payments and e-commerce and Bitcoin and ICOs and all the flavors of the week. This also includes things like reg check, if you're familiar with that, regulatory technology, insurance technology, real estate. These all bundle into the broader fintech. And we've been investors. We were one of the first insurance tech investors in 2000, for example. So, it's a really broad space, as it was just explained. It has a lot of disruptive capabilities. Historically, the financial and these broader services were highly regulated, right? And as that regulatory environment breaks down, or technology can be slid in amongst the regulations, it opens up a lot of green fields and white space for entrepreneurs to create lots of great companies. And I don't know if you folks follow some of the data, but PitchBook, which is a great data source, we all look at it here, just put out some data. I think we tweeted it tonight about fintech back on track. So fintech was, from a funding standpoint, was top of the mark in 2015, dropped back in 2016, and it's on track now for a little under $8 billion of funding. So that's not only mega rounds like SoFi you might hear about, or TransferWise or something like that, but that's a lot of capital going into a lot of entrepreneurs doing very innovative things in maybe not the sexiest sounding space like title insurance or mortgage or something like that, but these are all very, very big businesses. So, when we view it, it's not just the dollars and cents, it broadens out to anywhere where a transactive element takes place.
My name is Ram Jambunathan. I'm Managing Director of SAP.io. We're SAP's business unit focused on incubating innovation and driving new business models. Within my remit includes the SAP.io Foundries, which is our global network of top-tier programs, including for startups, including accelerators type models, which offer deep programmatic mentorship, access to SAP APIs, technologies, and exposure to SAP customers, as well as the SAP.io Fund, which is our early stage fund, or I should say our fund making investments in early stage startups, including those in the areas of fintech, such as banking, such as in reg tech, such as focused on GDPR. I think it was, like fellow panelists said it well, which is like almost anything when you think about it from a vertical dimension, when we think about banking, insurance. We think about it from a horizontal dimension, we think about line of business finance. And then when we think about it almost from a transaction dimension, when Ephraim said anything which almost involves a transaction could be considered somewhere in that span of fintech. When SAP looks at the world, it's like almost 80% of the world's revenue transactions touch an SAP system at some point. Fintech is incredibly important to where SAP is and how SAP thinks strategically, and the type of questions SAP customers face and how SAP is asked to think about. So, thank you.
Thanks. First off, big thanks to Rob, the Datati team, Roger for hosting us all tonight. My name is Jay. I'm an investor with NEA. We're a global multi-stage venture capital firm. We invest across a variety of sectors, fintech being one of them, that we're very excited about. A few companies in our portfolio that you may have heard of include Braintree, Open Door, Robinhood, Plaid, or Science, which was recently acquired by Guidewire. I think my colleagues all did a great job of explaining the field overall, or getting to that definition. We see fintech as a broad economic field where a variety of applications are bringing more efficiency to the financial services sector.
Okay, thanks very much, panel. So, you know what, I'm going to kind of open this up with, oh, by the way, how many entrepreneurs are in the audience here? How many investors? Service providers like me? A couple? It's pretty much mostly entrepreneurs here, and I gather you're here looking for the next big opportunity and you want to hear what the experts have to say. So I'm going to kick this off with kind of the big issue on everybody's mind right now, then we'll get into more traditional fintech, and I'm talking about ICOs, of course. I'll tell you, I get at least a call a day about an ICO, sometimes 3 calls a day. It's just a really big thing. It's like crowdfunding on steroids to me, and I'm starting to wonder, is this real? What is driving this? Is this something that every startup company ought to be thinking about, or at least maybe a little later stage company? And how does the investment community view this? So I'd like to hear your guys' thoughts on this, because it's way beyond my pay grade to understand if this is a real business or not.
Okay, so this thing is very hype driven. I wrote a Fintech M&A report on June 30th, and I wrote very little about cryptocurrencies because everything happened after June 30th, which seems like an eternity ago. It becomes in the headline a lot because it's one aspect of the tech economy that is accessible to the average person, and then when you see an astronomical rise in the price of something, a lot of groupthink takes over, and then everyone says, oh, I got into Bitcoin, I got this, and I made money here, now I have this coin and that coin and so on. The problem is any major innovation in finance, or certainly in currencies and transactions, takes several attempts to get right, 3, 4, 5 attempts, and this is not the attempt in which it will be gotten right because the regulatory bodies are not even involved. They cannot catch up with the speed. A ICO should be treated like a security, and if it isn't, then peddling it is not really in compliance with the rules, and the SEC and other bodies can change the rules and apply them retroactively as well, which a lot of people in the tech industry don't know.
Could I sort of interrupt? Maybe somebody could just kind of define what this is so we're all on the same page here. We understand how this works. I will.
All right. So distributed. Well, I mean, if you want to take a crack at it, you're welcome to. But what we're really talking about and how this all pieces is you're dealing with a distributed ledger. Everybody up on a distributed ledger concept, right? Ledger, people write in, it's all distributed. And the tokenization, whether that token being a Bitcoin, being a stock, the representation of stock. So to a large degree, it's just the tokenization and creating a virtual thing, if you will. Is that a good way to explain it?
Let me give you one even better. Here's a definition that I could understand. I heard this on a webinar the other day.
No one told me it was a test.
And then I'm going to turn it over to you experts. But suppose you go to a carnival and you go up and you buy yourself a drink ticket. And you take that drink ticket, and that entitles you to 1 glass of beer. So now you got a ticket that'll get you a glass of beer, and there's only so many of those tickets. It starts to get kind of valuable, so you can sell that ticket to somebody else, and maybe he'll go get that glass of beer. And the next thing you know, you've got this market in these drink tickets. That's kind of how I think of tokens at kind of the most basic level. So now, of course, the technology in the business is far more complex than that. But we're really, when we say tokenize something, that's sort of what we're talking about. We're creating this crypto that's going to be tied to either a utility, you can use it for something, like trade it for a beer, or to security, meaning that you're using it, it's tied to the profits from the efforts of somebody else. Okay, sorry to interrupt, but I want to kind of make sure we're all on the same page.
No, that was great. I mean, I would have never thought of the carnival thing myself, but it seemed to work. So again, it's tokenization. I mean, the way that we're seeing ICOs being used today are alternatives to raise capital, alternatives to public offerings. But I think the one thing that I'm just going to put a huge wet blanket over the whole thing, they did this before in the United States, and there was something called the 1929 crash. And that was because of predominantly mining and other types of companies basically started doing this, essentially issuing their own securities without a regulatory agency managing those, right? And not only is that, but now it's a global dynamic, right? So when my colleague says that, the SEC and other regulatory bodies have the capacity to come in and retroactively enforce these things, he is not kidding. They can retroactively come in and unwind any of this stuff. So, I mean, I think one should tread, carefully into this model. And I think from an entrepreneurial standpoint, as opposed to in here in Silicon Valley, instead of bull rushing the front door, think about all the other ways that these kinds of technologies can be applied to everything from the most simple notary public. A notary that comes in and validates a document actually has a physical ledger book. They still use that where they put your fingerprint and stuff like that. Okay, in China, they're already starting to move that into a distributed ledger environment. Okay, that's a great idea. I encourage someone in this room to get behind that, come see us with an MVP in like 6 months, and we're your guys.
So I'll echo those sentiments. I mean, when we look at the cryptocurrencies and think about it as a kind of an asset or a token for enabling their transactions on distributed applications, it's really the underlying technology of blockchain, which is more interesting to the set of use cases it can be applied to. So we think of blockchain in areas from a point of view of a stack, say, for example, at the infrastructure level, at the platform level, actually at the infrastructure, the protocol, the platform, and then the application level. And then what are the key enablers for each one of those? Where will the distinctive opportunities for unlocking value happen, and who will benefit, right? Will it be the incumbents, or will it be the new application vendors? And what will it take for them to succeed? And then what are the interesting applications? And if you look at whether it's big data analytics that's examining data that's being kept on the chain itself, or applying machine learning to that data and so on, what are then the next generation use cases, or kind of the second order effects that happen? So we, as SAP-IO are really focusing on the power of the chain itself versus the cryptocurrency. I think as was said earlier, Karthik, it's just a small fraction of whatever's happening in fintech. It's just gotten a lot of mind share right now. So.
Ram, I definitely agree with you there. We're very interested in some critical aspects of distributed ledger technology, what blockchain is and what it can really power. Of course, there's a lot of buzz around ICOs in today. We're going to attribute a lot of that to speculation, but we're really going to dig in and really figure out what power can this core distributed ledger technology bring, and especially to your point of the protocol layer versus the application layer above it. So the promise of saying, hey, a lot of the core value of something that's built on the blockchain is going to sit on the protocol layer versus the application layer is something that's very interesting, and it's an area that we're excited to look further into.
Okay, well, let me follow up on something you said. What's more interesting is the blockchain technology. So let's talk a little bit about that, because that's probably where the opportunities are for the folks in this audience, is to build something that uses a blockchain technology. FU in particular, you were talking about this as though it's really just an enabling technology that sits on top of maybe another business model.
Sure. I mean, it's been a buzzword. It's a buzzword predominantly in the funding market, and now it's trickled into the foreign markets and in the financial markets. But at the end of the day, it's another piece of technology, another sort of arrow in your quiver that you can go out and do interesting things with. And I think the way we view it is one should never start with a story like saying, okay, it's Java or blockchain or something. It's what you do with it, right? And it's just another tool. And the most compelling aspect of it is it's a tool which is somewhat uniquely suited for very specific and very effective things. And it allows for a mechanism, whether it's pharmaceuticals. This is a very meaningful technology for solving pharmaceutical issues or solving supply chain issues. It was built around the concept of financial transactions, and clearly launching a crowdsourced platform, if you will, within this environment is challenging. Well, what it did is it was used as the underlying technology behind Bitcoin, and Bitcoin catapulted it forward within that environment. So if you think about it, there's so many different categories that could be used for it that if one kind of backs away from saying, blockchain and starts thinking about solving a real problem, then this could be a very good solve. And as my colleagues were explaining, there's a stack involved anyway. Blockchain is one piece. You also probably have some cloud computing. There's a huge security issue. There's a huge AI issue. There are big problems with blockchain today in terms of concurrent transaction volumes. It's not a very high-speed model. There are some huge cybersecurity issues potentially, and even the fact that AI and some derivatives of that can crack a blockchain. So, one doesn't necessarily want to build their entire castle on a soft piece of earth. You need to probably layer it in with some other models as well. So one should get wrapped around the blockchain axle. One should look at it as another tool and a great tool for some key areas.
Can you guys give me some examples of businesses built on blockchain that you've invested in or that you've seen?
Happy to start here. I mean, I think we're still definitely in the very early innings of the blockchain space. I mean, maybe compared to a parallel like an Alta Vista and the search days, in that a lot of the developer stack still has yet to be built out. Even if we look at the Ethereum ecosystem, a lot of the core parts of these protocols to build distributed apps or dApps is still not fully ready yet. We've made, I guess, one bet in this space so far in a company called BlockCypher. It works, it's more of a web app infrastructure tool that's going to enable developers to build apps using the blockchain.
So I'll break it up into kind of two parts. So the first is, where we're seeing classes of applications of use case today are on an industry basis or maybe cross-industry horizontal. So if you think about some of the classic ones, say for example, looking at genealogy. So in the supply chains, if from say thinking about your cereal manufacturers who need to know everything that's happening from where the seeds are coming from to the conditions of a grain being grown and harvested, all the way to how it was stored and then manufactured into breakfast cereal. Everything like that is being now looked at and considered as a combination of, say, IoT and blockchain. Right? Similarly, in that same genealogy type of approach is being applied in the pharmaceutical industry, where people want to know, where you need to have super tight controls over how every step of the manufacturing process when it comes to drugs. And then you have also, so then you have the use case there, and then who needs to get on it, right? So in different sectors or different players, who in the pharmaceutical chain needs to be on on the manufacturing side and the distribution side, and then what roles to say payers, providers play in that as well. Who needs to be the anchors for a chain, and then who needs to be also on that chain as well as maybe secondary players on a chain. And then when it comes to like the investment space, when we're looking at people to invest in, it's where is the value coming from, right? So if I would articulate or hypothesize that if you're in an area where you can actually manage payments or get in the payment flow and take a cut, so manage a transaction, or if you're able to manage information, create some information arbitrage, or if you're able to connect different source classes of information, say systems of record, with chains themselves and the applications. Those are three interesting areas that we think about or look at when it comes to investing in startups. The fundamental challenge we see with this, I would fundamentally assert that right now, the place for most startups will be to create value is at the application layer. In some specific classes, it could be below that at the protocol layer, at the security layer, and so on, when we think about the platform or services layer. But I would say right now, I would assert it's applications where I would see startups creating value. So in concert with perhaps large incumbents, and in blockchain in particular.
Yeah, I mean, generally agree with all of it. And I think that you have to kind of look at the hype cycle, right? If we were sitting in this room 2 years ago, we'd all be talking about VR and 3D printing and all that. And now we're talking blockchain and no, I know you guys are, but not all of are you guys talking VR? No, if someone walks a VR deal in NEA, they're leaving soon.
Definitely a space we're still looking at as well.
We're all looking at, but I mean, the level of sort of hype around that changes. And I think you could look back at many of the different technology cycles and you can see sort of where it goes. And right now we're sort of, because of the Bitcoin boom and the ICO boom, it's remaining top of mind. And then oftentimes it goes from that hype cycle, and then you get the infrastructure built. And that's what my colleagues are talking about. You have to have the whole development stack and security elements and so on to really evolve it into a core platform. But where this becomes very interesting to entrepreneurs is being able to do what we do on the venture side, which is called pattern matching, which is being able to look at pieces of technology and relative businesses and apply those to one another and say, okay, this kind of a transaction model, meaning a distributed ledger or tokenization or whatever that might mean in terms of that application, and looking at that at a particular business problem and saying, wow, this is a very simple parallel. This is not necessarily something, so a great example is real estate transactions, right? There's the distributed ledger and all of the participants in a real estate transaction, the buyer, the seller, the financier, the title company, the taxes that are collected, and all of the different participants all participate in a particular model. Then in turn that's recorded with the county, with the state, and all other levels. So when you start to lay it over, those types of complex or distributed transactions work really well. So looking at a pattern like that, or looking toward other aspects like my colleague was talking about in terms of pharmaceuticals, these are areas we could say, wow, this technology is ideally suited. And that's sort of what Silicon Valley always did. When a new tech came out, whether it was mobility, whether it's SaaS or cloud and so on, and it's saying, how can we quickly adapt this new technology into solving a real business problem? And if you can get there and sort of own the hill, then as the infrastructure below gets built out for that technology, then you know, as your business scales, ideally those match at the same time. And that's where you get these really great startups.
So what I see with blockchain is that one component of a 1-2 punch, the other being artificial intelligence, that reforms a problem that people are so inured to they don't even think about anymore, which is government. Government is a low productivity sector of the economy. It is becoming lower and lower productivity relative to the money you spend on it. Relative to the private sector, that gap is becoming so high that it's untenable. And blockchain can make many governments' functions much more efficient. Real estate being just one example, but everything from contract enforcement to security to tax processing, tax auditing, all of those things. And this disruption, being 40% of the world economy, but still at the same or lower productivity as the 1970s, is huge and can enable smaller, more agile countries to compete with bigger countries. And I could give 25 different examples of where this can be reformed. We'd be here till midnight, but I find that to be particularly exciting because that is where not only are the disruptions most overdue, but it's so overdue that people don't even believe it can be done. It's like in 1880, everyone thought that no heavier than air flying machine was even possible. See, that's kind of where we are with what blockchain can enable, as well as the combination of blockchain and artificial intelligence, both being essential components of this disruption.
Okay, can I pause on that? Because what I've always heard about government technology or civic tech is that the markets weren't big enough, wasn't enough there to. But what you're saying is blockchain changes all that. There's huge opportunities if it's 40%, right?
Absolutely, it's 40% of the world economy. It's a productivity level that is extremely low. And think of all the things we assume can't change, like a Delaware LLC, that's the best LLC. It costs you $300 a year. And you won't necessarily go to another LLC for another state, let alone another country. But what if Estonia or Singapore, through a very sophisticated blockchain solution, says, hey, our LLC is just as robust, just as good, and it's $2 a year, not $300 a year? And that's just one example of what could be done potentially by someone who wants to address that particular market. Through these technologies, a smaller country can compete with a much larger government, such as the United States or China, and offer a lot of services that are international in scope.
Interesting. Well, let's kind of go down this path a little bit and talk about some of the other areas of fintech where there might be some opportunity or where there has been in the past. How about payment solutions? Is that still a hot market? Is that something where there's still room for a young entrepreneur to get involved in and make some changes and solve some problems? Would you guys invest in that?
I would say yes. I mean, there's, of course, opportunity. Payments is an enormous space. I think it depends on the application of payments. What is in B2B where we focus as SAP and SAP.io, what is the business problem to be solved? What is the specific use case or set of use cases you're looking at? So in the case of, say, for example, if you're doing settlements and payments, like we were talking earlier, you know, where are you taking margin out, or where are you able to address a specific pain point through the use of your solution that's going to reduce friction, say, for example. Coming back to the blockchain example around fintech, one popular area now is around receivables factoring, where you have multiple incumbents looking to actually provide funding against a set of receivables, so a small business typically can fund their business, but at the same time you want to protect against like say double lending against the same set of receivables, right? And so if you can enable that type of facility and take a cut of the loan that's being given, it's in a sense you're facilitating a payment, you're facilitating a transaction, and you're creating some value. I mean that's and addressing a whole new untapped market that traditionally is tough for either suppliers to find banks to lend, and then banks may be a little more risk averse against lending or put a super high risk premium to lend to these particular suppliers. So there it's kind of a confluence of all of these things, and payments is sort of at the crux in terms of how you're enabling that to happen. So.
Further comments on that?
Yeah, I mean, so what Facebook is doing right now in payments, I mean, they have the opportunity to potentially be the biggest bank in the world in very short order. The concept of moving to P2P, person-to-person type payment modelings, especially in emerging economies, become very interesting, where the banking systems are not quite as robust and efficient, I use that kindly, as they are here, for example. But the opportunities there, the distribution of equipment, resources, and so on being spread across. These are all very, very interesting aspects for us. We like lending. I mean, we haven't begun to see how this concept of distributed ledger and tokenization works with asset classes. We're already looking at, if everybody's familiar with the mortgage crisis, one of the issues was essentially taking these bundles of mortgages and spreading them out to, in essence, reduce risk in theory, which created more risk as you layered on. But in theory, one could take pools of debt and securitize that and spread it over a much larger, and therefore reducing the risk on an individual basis using some of these new blockchain and other technologies. So we really like fintech as a whole. Insurance industry is incredibly ripe for disruption. I mean, every single aspect of insurance is hugely ripe, from the actuary back end to the customer facing front ends, hugely ripe there. Then also, we look at just general real estate at all. I mean, globally real estate. I mean, there's even managing country to country differentials require some of this. So it's just it's a huge market.
Some statistics around payments, and also why it's such a difficult problem that still has so much opportunity. As you know, PayPal, that story was 2003. That was a long time ago. Yet so much has even happened after that. Even companies like Square and Stripe have been around for a few years. But the numbers are just staggering. Over $20 trillion of credit card transactions worldwide on an average 3% fee. That's $600 billion of credit card revenue. $600 billion. By contrast, the semiconductor industry, even today, is still only $360 billion. So it's almost twice the size of that. Another subsection of payments, which isn't even included in the payments sub-vertical, is remittances. Remittances are not only $450 billion a year, but the average transaction cost of those is 7%, and that 7% is coming out of the pockets of the poorest people, because remittances are usually only sent to people who are very poor, say US to Mexico or US to India or United Arab Emirates to Pakistan, Bangladesh. 7% transaction cost. And so of $450 billion. So there's just huge opportunity to shrink that cost down. And we're still just at the very beginning, even though these big name payment companies have been around for a few years.
You hit the point I was about to say exactly, right? So, I mean, I think it's, when we're looking at fintech as an industry overall, it's the sub-verticals, we're not looking at market sizes, even in the Bs, these market sizes are getting into the Ts. And when we have market sizes that are this large, there's going to be an abundance of opportunities for disruption and continued innovation. So whether it's finding new areas within payments So whether it's receivables factoring or whatever else it might be, or adjusting to new demographics, whether it's Venmo going after a slightly different demographic and achieving, I guess, social payments, quote unquote, or finding new ways to tackle these same problems, we think there's going to be continued innovation there. And completely agree with the other points brought to the table as well. So extending beyond payments to insurtech or regtech or real estate technology, we think fintech is something that's definitely here to stay, and this innovation is going to persist through and through.
Tell me about this. A couple of times now I've heard you guys say regtech. What the heck is that? Give me some examples. And I'll bet you wrote a paper on it.
I've written an entire book about this, an actual bound book, yes. The thing is, like I say, if you return to this very small government, libertarian type roots of Silicon Valley from 40, 50 years ago, government becomes a productivity bottleneck, and then when the regulatory complexity becomes very, very high, whether the tax code or everything else, it becomes a larger and larger share of overhead of what companies large and small have to think about, and it leads to many suboptimal decisions just for regulatory simplicity. So regtech, let's say a super enhanced version of TurboTax. When you have TurboTax, you don't care about how thick the tax code is anymore because you're just going to do a lot of things on an automated basis. It can simplify regulatory compliance of a whole host of other areas, especially internationally, since so many businesses are international. How many different countries' regulations are you going to learn about? And just the automation of that is a huge area. And that also makes things a lot safer in terms of like anti-money laundering, fraud, and other aspects, and just identity management. There are a lot of startups doing things like that. So regulatory technology, it sounds dry at the surface, but it's probably one of the most durable areas of fintech in terms of demand, because unless you think governments are going to become a lot simpler and regulation is going to be simpler, you're going to need some automation of regulatory compliance, and the commoditization of that furthermore reduces the advantage that a huge company like Apple or Google has over a startup who cannot really even navigate the regulations as well.
Yeah, I think one of the areas that you mentioned around, regtech or just regulations is GDPR. For those of you who aren't familiar, there's these data regulations that are going to be global data privacy regulations that are going to be implemented next year in Europe. Whether they're enforced or not, TBD, because most multinationals really aren't ready, but it's basically adhering to a strict set of personally identifiable information and geographically bound data, where if you violate those conditions, you can actually be fined up to 4% of your global total revenue, or $10 million or 10 million euros, whichever is greater, right? So you can have any
Greater, not less.
greater, yeah. So it's an enormous penalty that you can incur, and most companies aren't ready for this yet. And you're starting to see now a lot of activity, entrepreneurial activity, innovation activity in the startup space. We have actually invested in a startup in this space, which is focused on helping companies understand where their information is, using machine learning, looking at user behavior, seeing how data movements are happening within an enterprise to help your compliance functions know and understand within the company, if you are actually in compliance of GDPR, what you need to do to be compliant with GDPR. As an example, I think so much money is being spent just to keep companies compliant and within regulations, and I think it's overlooked because it's not, to your point earlier, it's not seen as sexy, but it is very necessary. So.
You touched on something that reminded me. I do a lot of these panels on a lot of different areas, and they all come back to one thing eventually, and that's data. And we hadn't talked about that yet, so I'd like to maybe have some comment on the value of the data, the applications, the companies that are built up around it. For example, you talked about a real estate tech company. I can imagine how valuable that data would be out in the market. Have you seen companies capitalizing on that, and is that investable? Is that fundable?
Yeah. I mean, absolutely, right? They say data is the, when you say data is the new oil, data is the new gold, whatever. Data is the becoming the asset to have, and you're seeing businesses built just to capture data or generate new data, proprietary data sets, such that then they can monetize those in interesting new ways, whether it's about insights or data as a service business models, or new classes of applications that they can build. But absolutely, you know, when we look at startups or companies to invest in it, they usually combine 3 key characteristics. Say deep domain expertise. We keep coming back to domain expertise because I think generally having a fundamental understanding of business process is going to really help you win business.
Let me pause on just a second. So when you say domain expertise, you mean, for example, the real estate technology I was talking about, the founding team would really understand the real estate business.
Yeah.
Essential, that'd be fundamental.
I would say
Okay.
if you were going to win there, I think it's helpful to have a good understanding
Well, that's different
of
from the way-
of the specific processes in this case that are, I'd say, of the workflows within that business process. So, for example, in the real estate case, how the workflow happens between the agent, between the lender, between the person who's going to be buying or renting that piece of property, and then the government, right? So how the workflow is between all of those things, and then how you can actually influence or make that workflow more efficient, and by taking friction out, as an example, right? And at the same time, you could start capturing more data. But coming back to that, it's the original premise: deep domain expertise, deep technological capability, and oftentimes with machine learning, it's having a proprietary ontology or being able to generate new data sets which are going to allow you competitive differentiation long term and create new, potentially viable business models or business streams as an outcome. So.
Following on that point, what's super interesting is so we've always heard that this treasure trove of data was going to become this additional value to most startups. From our perspective, we just have never seen that happen. In fact, we view this data piece as actually sort of new IP. So we look at it as a defensible model, which I think is what you were touching on at the end. And in an area where IP becomes murkier and murkier because it's a very thin line, to us that's what that IP is that data. There have been a lot of thoughts that yes, we'll go build this business, but then we'll throw off all this great data and we'll make a bunch of money off it. And it just never happens from our perspective. We really view it as, okay, you're going to throw off all this data, and if you know how to use it to deliver a better service to your customer, then you will have used it correctly. If that data becomes a sort of intellectual property value to your company, and then a sort of a strong defensibility for your business. That's how we see it, versus you're going to kick out a lot of data and we'll come up with all kinds of really great ways of making all this great money. Everybody has talked about those things. Rarely we've seen it come to fruition. So we always see startups that we're going to do this business, and then once we have all this data, we're going to make $1 billion a year doing something with data, and we just never see it happen.
Yeah, oftentimes it takes quite a while to acquire that rich data set. You're right.
Now, the thing about data is data in and of itself doesn't generate value of its own accord. It's just that data of a certain quantity and quality then becomes something that can attract AI to that data, and then there's value added.
That's like dream state stuff. I hate to say it. They're like, when you look at data companies that are really making money in this space, you're down to Experian and people like that. And they've got more trouble trying to keep all their stuff in the box than they have anything else right now. So, I always want to caution entrepreneurs that this concept that we generate this data and then get some AI and then all of a sudden it's going to, make a lot of money. Focus on the core business, and then the data becomes your defensibility. It becomes your mechanism to defend your ground when some young upstart can come along with some simple software and do it. So I'm going to debate it with you.
And then the other aspect about data is whoever thinks they have a lot of data now, that can the hierarchy can be rearranged very, very quickly. Whatever one thinks is a lot of data today, we keep saying now what we have today is big data. It's so much more than 2014. Well, in 2020, 3 years from now, there'll be an amount of data that is much more than what exists now. And someone who you haven't even heard about now can through a separate means, accrue a new set of data during that time, just because the funnel is growing so quickly that there's just so much turnover
And the
there.
only one that wins is cloud storage providers who make all this money because now you're creating all this data and someone's got to put it somewhere.
Yeah, sell the shovels in the gold rush, sell the barrels to the oil producer, so on.
Jay, I got to ask, where does NEA come out on this? Because you guys do like a little later stage deals, I think B and C rounds.
I think with the data question, there's two ways to think about data. So either the discussion I think we've been having largely is creating these proprietary data sets that become the company's data moat. But there's also just the question of, there's just in general already today, there's so much more data being generated on a daily basis that companies also have a huge opportunity just to harness and understand the data that's already readily available out there. And that's tremendously important, especially on this topic of fintech. To say, hey, transaction data or all this data is already being generated, how do we best use that and utilize that either in our underwriting, in whatever services or products that we're offering to our customers?
In the core business.
Absolutely.
Yeah.
So I think there's a two-sided equation here, and data is, of course, very core to both of those.
And that's really almost like the defensibility or the IP, the value creation. It becomes the root of the business itself versus a different business unit, I think, is that.
Yeah, just to follow on your point, Jay, it's almost, we see this in enterprises all the time. They already have a lot of data. It's unstructured, or there's no semantics involved or context involved with it, so they can't make sense of it. So, but if there is a way that can do, they can actually make sense of that unstructured or semi-structured data, then you can actually derive a lot of value from it. So there's, now you see a class of innovators going in and trying to focus on helping enterprises understand what the value is of this data being thrown out. When we talk about the transactional layer within different business applications or business processes, or data within, say, different, whether it's in HR or whether it's in the finance, LOB, and so on. What's, what new value you can get just out of the data you have. So sometimes you don't even have to generate new data classes. You just need to know how to classify the data you have.
Well, I don't want you guys to get out of here without letting our audience know what you think is hot, what you think the good opportunities are. What would you fund if somebody brought it to you? And what advice can you give our audience here about things that you think, the future? What are really good opportunities in the future? In fintech, I should add.
I mean, we've kind of covered everything, folks. I mean, we're kind of down to, applying blockchain to cannabis supply chain at this point. You guys are set. I mean, if 6 months from now, everybody's going to be talking cannabis, not blockchain. Watch me.
Talk a little bit about that, because
I knew someone would do that.
I mean, just because the way you described it earlier, it sort of, I think it's helpful in clarifying just how a fintech technology can really enable some other business.
Sure. I mean, well, you've got to think about it from supply chain that my colleague was talking about to open markets, to marketplaces. All of those elements are considered fintech, right? So, you can apply it. I mean, we're looking at a marketplace right now that is for trading tree nuts. Okay, sounds pretty boring, pretty silly, but there's a lot of walnuts and almonds and pistachios that move around this world. There's a lot of these that are grown in different parts of the world, and being able to optimize that supply chain and normalize pricing and create a global market around something is amazing, right? And then that is very much a fintech operation. It just so happens that probably falls into agriculture as well. Certainly areas, we have a company called Wine Direct, which is one of the largest logistics suppliers for wine in the country, and they're applying now blockchain to their new logistics and shipping plan. So, I think that broadly, when we think fintech, you think a transaction orientation, but also looking for these big, ripe, disruptible markets with white space, real estate, insurance, areas like that. I mean, as simply as home warranties are ripe for disruption. So, this is really a big green field for everyone.
Several good points made. I think we were discussing in the room earlier that we have to actually know people who are building next generation ERP systems for weed, right? So it's It's actually now it's become its own specialized market with its own, probably will hold its own specialized CRM and everything else. So it'll have its own little own enterprise software ecosystem just around cannabis at some point. There are a lot of areas where I think that are interesting today when it comes to, let's say, fintech, red tech, insurance tech. Let's throw out a few, for example, that I'm aware of or that I think about. Anything which just takes friction out of the workflow or reduces it, it becomes very valuable. So for example, now we're starting to see in the insurance space, startups that are applying machine vision to be able to do risk assessments, say for car accidents. So you don't have to send a claims adjuster out there after an accident happens. You take a picture, machine vision algorithms, then come up with an estimate for what the repair will be, and it can then immediately cut a check in the system. And typically people are willing to take less if they can get immediate payment versus fighting for more, which there may be significant delays. So it's a win all around. I don't have to wait for my check, and the insurance company actually saves quite a bit of money in being able to just cut a check on the spot versus having to send a claim adjuster out or so on. An example of how one may not necessarily think of this as fintech, but it is very much an extension of fintech or insurance tech, and it's an application of new technologies to the space. I would say another area when we've been talking about blockchain again, it's really at the applications layer when we look for startups. So if it's at the, again, coming back to the stack I mentioned earlier on infrastructure, protocols, platforms, and applications, I would say at that top layer is where we would probably look for a company which is really driving value along a particular use case. So whether it's some of those that I mentioned earlier around genealogies or around like things like could be logistics for in the airlines industry and so on, or in IoT for ag tech, and the chain as well in terms of enabling finance and transactions. Those are all areas, as an example, that we would be interested in. Extensions of finance, insurtech, and regtech. So.
I think generally across the board, we love to see entrepreneurs who are going after very large problems with a creative and innovative solution. And just the nature of fintech, as we discussed earlier, given the just pure large size of the market, that creates a great, mesh or joining of those two things right there itself. If we look at a couple of the companies in our portfolio, we have the companies like Robinhood, which is offering a zero fee-based way to engage with the stock market, and has had a tremendous amount of resonance with this core customer base. Same thing with something like a Zero Financial, which is offering a points-based debit card system to appeal also to a millennial audience who is increasingly moving away from credit and credit cards. These are products that are going after very large, significant markets and really having resonance with their customers. Just to address a point mentioned earlier as well, we are a larger firm, Roger, but we do also participate at all levels of the spectrum. So we do have a very active seed practice as well. Awesome. So we have a very active seed practice, but we do participate all the way through the growth stage.
So we're on the transaction side, not so much the buy side, but I do think that we're going to have a flurry of M&A activity in a number of verticals of fintech very, very soon. Like I said, in payments and lending in particular, there's yet quite a bit to come. But the areas that are going to grow, similar to what we talked about earlier, areas important for an entrepreneur to focus on right now could be regulatory, insurance, and remittance, which we spoke about at length already, but I'd say those are kind of at the right stage where the growth curve is ahead of them.
And he has a really good transaction company. He actually sold one of our companies last year, Smoto. So yeah, if you need to sell.
Yeah, right before Cepheus too. So we're on the last companies before Cepheus. So yeah.
End of the year was great. I was like, these guys.
Let me ask you about one in particular. It seems I've seen a lot of companies trying to do, you talked about, I think you mentioned the millennial population and going after that segment. I've seen a lot of companies that have like financial advice or financial counseling, either in a mobile or an app, web app, something like that. I don't know, is that, because I'm thinking, I not only think of the upside, but what are the things maybe we ought to stay away from? Because they seemed like a good idea at the time. Didn't really take off very well. Would that be one of them? You don't have to answer that.
Well, I mean,
It
that's
might be-
really a content story, right? I mean,
Yeah.
you're really talking about a content business when you're creating content, trying to educate people, and that kind of falls into a different bucket. But, I think that this is such a big green field that a big part of the challenge of Silicon Valley and also our success is to look for and find these opportunities that aren't being covered elsewhere. I mean, but it is a very much global game, and the number one thing I think we like to say is, take the blinders off, make sure you're checking lots of other places around the world, because a bunch of developers in Ankara or a bunch of developers in Dubai might be building the same thing, and you don't want to end up being behind that curve. So, and then the beauty of the fintech space is the U.S. market alone is in these niche markets are big enough to build a giant business and get acquired or go public and whatnot. So it's a very, very big market opportunity.
Okay. We're at 8 o'clock. Rob, do you want to open it up to questions?
First of all, let's give that for our panel. So if you have a question, come on up. We'll have a little line here. We want to take as many questions as possible, and we'll go all the way till 8:30. So who's got a question? Come on down. Come here. Yeah. Stand here. Stand here.
Because I have to, yeah.
It's a small crowd.
I see. When I read the news, I'm a single founder of my startup, and I read the news that maybe in the future, the Amazon or any other big company, they might act as a bank. And how soon do you think it happens in our world? And what opportunity can we, as a startup, like small startup, can we take from that dynamic changes?
Yeah, so I mean, Facebook is already starting to act like a bank. I mean, their whole little payment strategy, which they're quietly rolling out here amongst everything else, is going to change it. I mean, and if you want to, follow us on Twitter. Every day between 4:30 and 7, we tweet about fintech and regtech and payments. And right now, we're very excited about who the disruptors are. There was this belief that the SoFis and some of these other more financial lending clubs were the real bank killers. We believe, and the general perspective is, it's going to be Facebook that's the real bank killer. It's going to be a Google, which is really the bank killer, much more so than any of these others. In fact, our belief is SoFi and Lending Club and all these other models are just a slightly different spin on a very boring story. Whereas when you go into a model like a social network, God knows LinkedIn and others will eventually move into the space. Imagine if LinkedIn started offering business credit services as Facebook's going to be looking at making payments and other mechanisms available. This is going to be really disruptive to the banking industry, but it will create lots of great opportunities to build things around it.
So, can you talk about the opportunity in more detail? I mean, if you
It's not our job to create it. It's our job to give you money to pursue it.
Anyway, thanks.
So, small point to add on. So, all these big tech companies can be banks and can have all the necessary pieces to assemble that. Amazon, Google, Facebook. Remember, this could take a little bit longer than people think because this doesn't happen quite as quickly as one would say. Because way back in 1997, not everyone remembers this, but Bill Gates said, I'm going to disrupt banks. We're going to do it right now. Banks are already unneeded. And he was right, technically, but that was already 20 years ago. He talked about it for 6 months, then he suddenly stopped talking about it in 1997. So he was right, but I mean, at that time, people probably didn't think, well, even in 2017, we'd still only be this far. We made some progress, but...
so can I, Then, I heard that, I was told that the PSD2, the directive, will be effective soon, maybe in 3 or 6 months from the next year in European country. And maybe the United States also catch up like those deregulations, and maybe similar or same type of the PSD2 will be applied into the United States, which opens the opportunities that what Bill Gates has already said before. Like, so those deregulation changes make what the Bill Gates said become real in states. Then how soon will those regulations where the same PSD2 will be applied in United States, how soon do you think it will happen in the States?
Well, by now everyone's figured out that I think regulatory changes are usually way too slow until they are forced to happen by some event that the governments cannot control. But I'd still say if up to them, it would take quite a few years still.
I see. So PSD, which means that which is open banking, so any entity or any qualified company can be a bank in UK and in European country, then it will happen next year, but still like it might take few more years in the United States. Are you saying that?
It's going to take forever.
I see. Thank you.
Banking lobby is epic.
They won't do it until they're forced to do it against their will.
I
So
see.
however long you think that event might take.
Cannabis
Yeah.
would be the precursor to that. I'm not kidding because the traditional banks will not allow cannabis companies to bank with them, and that extends to leasing, loans, etc., which is creating an alternative banking structure. And whenever you look at, we call it the sin accelerator, right? If you look at what brought, I've got to be very careful in today's environment, what brought videotape, what brought video on the internet, what brought e-commerce, what brought all of these things, oftentimes had the sin accelerator. And when you look back at the traditional trends, one of the things that I think we're seeing as potentially accelerating areas like supply chain, banking transition, etc., will be something like a cannabis or other related model. Like right now, the way that these cannabis companies are getting around the issues of depositing large sums of cash, they're actually gaming the entire global ATM network. So this is very interesting from an entrepreneur standpoint because basically if you put an ATM in a dispensary and then dispensary gets a discount if you use that ATM, but you don't actually take cash out of the ATM. That cash that's in the ATM system can come out of the machine anywhere in the world. So the dispensary is essentially moving cash inside the ATM network around the world already. See, this is a hole that entrepreneurs like yourselves using Fintech can figure out how to solve. It's not just building the bank of cannabis, it's how do you allow for payment transactions to occur in some of these areas, right? So that's kind of thing that will hasten these alternative banking models.
I would caution you to be careful about anti-money laundering rules in anything that's going to approach something like that.
Well, these are $40 transactions, but yeah, again, I'm not encouraging you to start a global ATM network.
Thanks.
Next question.
Question for the panel. My name is Saeed, and I am a co-founder in a fintech startup. I'd call it a smart contract startup. And our focus is solutions for international trade. So you guys talked about almost everything and talked very briefly on international trade in terms of accounts receivable. So this is think import, export, complete paper mesh, complete and utter. It's about $1 billion in penalties and payments. So we're tackling that. So my question is, because we have experts here in this panel, are you aware of any regulations that are coming down in international trade in smart contracts that I should be worried about?
If anyone has things like this at the top of their head.
Yeah. So we've looked at a couple of companies that they're dealing with things like letter of credit and trade transactions via smart contract. Some countries around the world, particularly the Gulf, Southeast Asia, look like they're going to start to adapt fairly quickly. The problem that you have is you have to get the bulk of the high volume countries to agree on a standard, which they have not done. Yeah. And the last thing you want to do is be caught up in a global trade snafu. What I will tell you is, rental contracts on apartments are still done by hand. And there are a lot more of those that get done in the United States every day than a lot of LCs around the world, letters of credit and so on. So the only thing I would say is oftentimes you work on a very complex solution because it's a very complex problem. But then you realize that there are lots of other ways to pivot, and that's the greatest part of Silicon Valley and startups. So just keep your eyes open to ways that you can apply that smart sort of contract to a much easier solvable problem.
Yeah, definitely. Real estate is one that you mentioned. So,
What's interesting about that, you hit on a point that we talked a little bit about. It seems that the technologies that are really taking off in the industries are the ones that are just really super hard to regulate, aren't they? Because there's nothing that's holding them back. It's like they say, it's why we have 140 characters instead of flying cars, right?
Yeah, well, I think at the end of the day, what you don't want to do is swim upstream. You want to find the least amount of friction, and when you've got to collect a lot of global entities and they all have to kind of come together and agree on something, that's best left for nonprofits and government organizations. It's not best left for because you don't control your destiny. So.
Yeah, and in the case of smart contracts, it's to the point that you're making, whether it's countries or whether it's incumbents along that particular chain, if it's in supply chain, having the shippers and the carriers and the freight forwarders, the other 3PLs who all need to get on to your particular system can be a fairly daunting challenge, right? Unless you have one big guy there who tells everyone else, get onto this platform or else I'm not going to do business with you, right? If you can work with a large entity and get that particular entity to drive that behavior among everyone else in its value chain, then it's a little bit easier to overcome this particular obstacle. But that's one we commonly see, so.
Try to get a $20 million grant from the deal. If you have a compelling case, then let's say the amount of money that could be approached to go around and say equity finance.
So our approach has been that we basically, I cannot name names, but we basically our customer base includes large companies who currently do international trade in large volumes. That's how we focus it.
Next question.
Hello, my name is Kevron. I'm also a founder at a smart contract space, but we're focused more on onboarding and verifying who's applying for anything benefits or verification. My question is in the space of complying to the law, because we had to dumb down our product in order to meet requirements, and especially in the notary space, because our product is basically getting rid of signature. We do a selfie video statement saying, I, James Sean, agree to document X in reference to X. And then we take a photo of driver's license, we match and verify who you are and submit your application. For that process, how can we not at the same time innovate, but at the same time meet requirements? Because a lot of them are, for business use, they accept us, but for legal use, then it's not legally allowed. How do you navigate those two spaces?
I mean, you're not going to be able to radically change that on your timeline. What you can do, though, is you could go to, in the case of, notary is a challenging one because it stems a lot. But if you look at real estate, you look like title, and you look at certain areas in that aspect, there are 4 or 5 title companies that basically control the entire business in the United States. All it takes is one or more of those to like your model, consider it even a marketing tool for them, whether it's a gimmick, however you want to view it. But ultimately, they save a ton of money and they get this market velocity off it. And that will push down on the industry. So, you have to be able to find your in. Is Fidelity National Title looking for a way to get up on the next respective title company? And then that's the gimmick. Do you have to, yeah, sure, there's a notary still probably floating around the office, but did did they leverage that?
Is your point that the law is not keeping up with your technology?
Yeah, part of the because there's two laws right now. There's the e-signature act, which governs the e-signature, and there's a notary that governs the notary. But our technology combines those two, and we're in the middle. So right now we're complying to this one, but therefore there's no law for notary.
Yeah, it's interesting. I've been hearing that theme kind of comes up again and again here. That I think you guys all need good lobbyists.
So what I would do
there
though
funding
is,
for that one?
I look outside the U.S. There are a lot of emerging countries that are creating infrastructure around some of these pieces, and we've seen P2P currencies, mobile currencies, and things like that take off in other countries where they never would have. We're seeing technology and things like referral marketing in Latin America that is taking off in a way that maybe we all funded companies to do and didn't do here, but because of the culture, it was way more interesting. So when you've got emerging, like Colombia is a great example. I mean, that's an emerged country coming out of something. They may be willing to adopt those kinds of technologies.
I mean, you're right, because one of our clients is Ethiopian embassy.
Which one?
Ethiopian embassy, which is an African country.
Think outside of the box. I mean, if they don't have a notary system, you might give them one.
All right, next question.
Hi, everyone. This question is probably for Kartik in particular because you're an educator, but if any of you have feedback, please share it. What I'd like to discuss is the barrier of entry into fintech. And I'm personally a software developer. I don't have a financial background, but on the side, I like to work on projects. One recent thing that I did was take a crack at IoT, and it was a pleasant experience because there was a lot of structure that helped me get going. So, for example, for doing machine learning, there were tons of open source libraries where I could do human detection. There was a big community where I can discuss ideas and stuff like that. And I was wondering whether there's something similar for fintech, and that's not a fair question because fintech is very, very large. But let's take an investment, for example. Let's say that I just want to see whether I can build a passive income and do slightly better than just putting my money in an index fund. Are there sort of websites that have sort of data that I could use to train models to see how well I can do? I did find some on my own. One of them was Quantopian, but I felt like their terms of use was very restrictive, that if your algorithm does well, they get exclusivity right over using it, and you only get 10% back, stuff like that. I'd rather stay towards open source frameworks usually. And my last quick question, very quick, is you mentioned that you teach at Stanford a course on AI applied to finance. I would love to learn the number and the name of the course.
So there are a number of different different fintech companies where if you have a trading algorithm, they will find institutional money for you. Not just Quantopia, but the other two are Quantiac and QuantHouse. And that was 4 months ago too. There might be a few more after that. You have to see which one has the terms that you like, because there'll be a shakeout and so forth. But it is something that disrupts the hedge fund model in that you may be good at trading, and a lot of people like that. Unless you have the contacts to generate institutional money, you can't be a hedge fund manager. So that process is getting somewhat more democratized. And if you can automate an options trading strategy or just a covered call strategy, like if you take the S&P 500 and just earn an extra 3% a year from covered calls, you can do that. Now, the class I taught about that at Stanford was in spring quarter. I don't know if I'll teach that class again for a while because I'm instead going to teach a class about business models and disruptive technology. But in general, if you can figure out how to have a strategy that beats the index even by a little bit and can automate that, then there's now quite a few companies you can shop that to and see which one is the best fit for you in terms of getting institutional money. And fine, they may take 80% of the gain, you get 20%, but that's still very good if you have no other means through which to have 100 million of AUM. You're avoiding the liability Having run a hedge fund, I can tell you that hedge fund manager stress is a different type of stress. It's not like any other profession, right? I mean,
So I know a bunch of guys that are doing this, by the way, in New York, that were all quants from big shops that now just sit around like, racking out, algorithms and then just letting them loose to the highest bidder. So if you can, on your weekends, crank out a couple of cool algorithms and place them somewhere, you're going to turn into quite a little cottage industry.
Thank you.
Next question.
Next question.
Hi. As an entrepreneur, one of the things I really like about ICOs is that it's a way to bootstrap a user base. So the people buying your tokens are your early adopters. But now with all this uncertainty, the legal uncertainty with the SEC and people like Tezos getting sued and potentially class action lawsuits, I'm a little bit nervous about doing an ICO. So I wanted to ask you guys as investors, how do you feel about the companies you invest in doing these token sales?
Karthik, I have a question for you. On that note, do you believe in the hypothesis that most of the early investors are adopters of the solution, or do you think they're speculators who are just trying to get
the
rich?
very earliest were probably adopters, but many people who to the outside look early, but were not as early, are speculators. Now, just in a very general sense, I would say, unless you're very, very, very well versed in token generation, all the technologies behind it, don't get involved in ICOs. There will come a time 3-4 years from now where a lot of people will regret they were involved in it, and not just because they lost money, because they had to deal with blue-coated FBI agents knocking on the door at 6 a.m. Now, one little bit of history that I wanted to work into a prior answer but didn't get the chance is, any change in monetary structure in the system takes several attempts. Maybe 700-800 years ago, there was only metal money, copper, silver, gold coins. And when a regime changed, as often happened, they would melt the old coins and make the new coins of the new empire or something like that. The transition to paper money was more controversial because it's not based on a precious metal with a certain fixed supply. And when a regime changed, then the paper has exactly no value whatsoever. That was a ledger of sorts, the same way we would describe a ledger today. And that took 3 or 4 attempts to get to work properly. And people literally died over that issue. In fact, thousands of people died over that issue. Now we're in better times now. People probably won't actually die, but these things take 3 or 4 attempts, and a lot of errors have to be made along the way, and so on. And what we call tokens now will become a new asset class of a certain type. They enable business participation of a new type. Like the best example that I've ever heard is that, look at Facebook, very successful today. But it would not have been successful without the first 1,000 Facebook users and the first 1 million Facebook users. And most of them didn't get anything other than they got to use Facebook and waste a lot of their time on it, right? So this is a new type of monetary structure that can make those types of ownership or participation possible. But it's not going to happen in this wave. This is probably attempt number 1 or 1.5 out of 4 or 5 ultimate attempts.
So to one of your points, you were asking us on the financing side, how are we going to view this ICO? I think for us, first my little shtick is that crowdfunding and ICOs is like basically as we funded the disruption of all these other industries, it's now coming back to roost, and now we're getting disrupted. But I think that as we see a couple of waves of this happen, whether it was crowdfunding and crowdsourced equity and now we're ICO and so on, I think it's becoming abundantly clear to all, and this means accelerators, financiers, this is the easiest time in the history of entrepreneurship to launch a company. I mean, and I just literally told the CEO to pull up his big boy pants the other day. I mean, literally. Because when I started my company, there were like a fraction of the VCs that exist today. They were total small count. Their bar was so high, you can't even imagine, that we could never get it. We used our credit cards to generate the cash, which I actually encourage today because you can get these really low rates. And the key there is that right now, without getting terribly exotic with ICOs and crowdfunding and everything else, you have an incredible ecosystem when you're here. Now, if you were in Moldavia and you needed to try and do this where there were no VCs and very hard to crowdfund, and then using ICOs and alternatives are there, But if you build a reasonable MVP and get a reasonable customer base, there is an accelerator, an incubator, and probably a VC that will stake you long enough to prove out whether you have a real business or not. And so my point to anybody who lives in the Bay Area is, don't waste your time with that. You've got, like right here at this table, you could, with a great idea, launch your business.
And one important point about whether we would do ICOs, now any investment banker who's FINRA registered and all that, we emphatically don't do that simply because the ICOs market is not being a security, so people who are not registered representatives are marketing that. That is exactly what will be retroactively changed, and people say, well, you did this 3 years ago, and it's illegal now, so now you're in trouble, type of thing. So what is a security, and the state laws and federal laws around that are very, very distinct, and marketing something that should be called a security or could be called a security if you're not a FINRA registered person is something they can always choose to enforce at a time of their convenience. So that's another reason that I'm not really involved in that directly. Now, there's a lot of M&A opportunities for companies that did ICOs and then want to do an M&A just because they got some more traction and their cap table is a little bit different. That is the secondary way someone like us could be involved.
Pretty pessimistic, huh? As a lawyer, I see about a white paper a day. And for me, I've kind of adopted a smell test because most of the ones I see, I read it, and I just don't believe it. I just don't believe it. But then there's good ones too. The utility tokens can be a really good thing. But what you said is right. It reminds me there was a craze about 10 or 15 years ago in doing reverse mergers in the public shelves and going out and buying SPACs. You guys ever do SPACs? And I remember this kind of reminds me of that because I saw a lot of those too. And yeah. Well, when that finally failed, when those failed, oh, what a disaster. It was really ugly. So I'm nervous myself.
I mean, look, if you've exhausted all other means and no one really likes your startup, you that's it.
That's actually another aspect of ICOs that's really interesting is that you don't need buy-in from the traditional establishment finance crowd, whereas something that's really innovative.
Use the mic so they can record you.
Yeah. Since I'm not shucking for my own space. Look, I spent 11 years on your side of the table, man, right? And I managed to claw my way through somehow. And my point is there's a huge value in this ecosystem. I mean, in my general sense of it is, if you're, outside, way outside of the bubble and can't manage to get to a bubble to use the ecosystem, okay, fine, get creative. But if you're in the bubble, I mean, to me, you're doing it, at that point to just be like, I don't want to be part of the system, is just a, it's just a personal preference, not a wise decision.
Thank you.
All right, next question.
First, excuse my poor English. I'm from Taiwan just a few days ago. I have developed in the blockchain technology for many years, but I encountered one major contradiction. The real world business logic is quite contradictory to the blockchain logic. First one, the real world uses a fiat currency, but blockchain, you need a token. And second one is that in the real world, every contract needs mutual agreements. In blockchain, it's one way, just send email. And the third question is, the real world, when you write down or record your right or your liability, is based on double ledger entry. But in blockchain, it's single entry, just journal, not a ledger. And the fourth problem is the real world needs regulatory, but in blockchain, almost anarchy. So we encounter this problem. Then you gentlemen are the expertise of blockchain. How do you perceive this problem?
So in the mid 1980s, Coca-Cola in cans became a really hot commodity. There was a limited supply issue, and I remember people gaming the market by literally selling container loads of Coca-Cola in different countries around the world. This is a straight commoditization story right now on this Bitcoin piece. And if you want to look at the financial crisis, I mean, there is a financial group somewhere that will turn anything into effectively a market. So what you've had happen is you've got kind of a sexy story in Bitcoin. They've turned it into a great market. There seems to be a technology underpinning that, you know, gives some level of confidence that it's not being gamed to the max, right? Now, you know, again, coming back to the be-all, end-all conversation we had earlier, is the stack is incomplete, right? Jay was talking about, you know, there's still lots of investment across the technology stack that has to occur to solve a lot of those interactive problems. So it's a nascent technology, and you know, whenever you're going to get into it, you have to find, you know, its either precise use case or make it part of a broader solution that solves a real problem. And if you know, solve a problem, you save people money, you know, and build that real business case, then after a while, whether it's blockchain or Java or whatever, it doesn't matter.
Actually, I think we need like a gateway, transfer or translate those real world protocol into blockchain protocol, and vice versa. That's what we have been doing.
Yeah, that is one interesting area that we see some startups starting to address. This translation between real world protocols, if you want to call it, or systems of record, and the blockchains and the different chains as well. And there's value there, right? So if you can, so I agree that there's a need for that and there's value for that. Some of the other things which you mentioned, which I'm not sure are necessarily problems. I think you were saying that, you know, with the one-way writing of the chain itself and you know, creating a one-way hash is part of the value of that. You can't rewrite existing records, right? That you have actually you know, so that it is verified that you can go back and look, but you don't rewrite unless you have everybody agreeing to, in a private chain, for example, opening up and looking at records again.
Okay, I'm making sure. 2 seconds. Actually, we have a patent methodology I would like to share with you in the proper time. So I can contact you and send you my pitch deck.
Sure.
Pitch deck. So, okay, thank you.
All right, last question.
Thank you. I'm Julius, and I want to ask, well, to be honest, I think blockchain, especially cryptocurrency, they have taken away or returned some of the power from government to the people. Say, previously, just government can print money. Now, if you want to print some money, just go mine some Bitcoin, right? Then, what do you think about the stance that government, in the face of this power challenge, how would they respond? And will this returning of power sustaining itself so big such that government may even disintegrate it into a lot of smaller pieces than it is now?
I'll field it quickly. So I mean, in general, I mean, that's a great coffee house conversation. I mean, I think from our standpoint, you know, we view it, or at least I view the Bitcoin thing as really an investor-fueled, you know, opportunity. Whether it stands the test of time or not, it remains to be seen. But what has happened is the distributed ledger model has become validated. And, you know, without spending too much time in conspiracy theories, you know, our job in Silicon Valley is to take great technology that has gotten some level of validation and apply it, you know, wildly into other areas to become crazy rich. And I encourage you to try that approach.
Actually, I tried that approach. In fact, I co-founded a company to do financial trading with almost zero regulation, because with smart contract it's so powerful that it can actually eliminate any cheating. It can eliminate, well, because when you trade derivative, you have to pay a certain amount of deposit. With smart contract, that's guaranteed paid. So, well, in that sense, I actually take away, say, power of the SEC. So in that, I'm wondering if government face challenges like this, then how would they respond?
Well, they respond in a negative way usually. Remember what I said before about 6 a.m. visits and things like that? That's usually the first reaction.
It gets worse when you leave here.
Yeah. So they will say that a cryptocurrency has to be backed by a nation state that has a central bank and most importantly a military to enforce these things. And they'll shut down certain things and so on, but eventually some reform happens around the edges because smaller countries, like I was saying before, can compete with larger countries and take some very fat revenue streams that were not available to smaller countries. Just like I said, is very simple example, just these Delaware LLCs and C Corps that everyone pays for their startup or something. You pay, hundreds of dollars a year. It can be $2 a year or something like that. So there'll be some reforms around the edges, but at first, the governments of the world are more united with each other than one would cooperate with you against the other. So that's the way you have to think about how they will approach this in the short term at least.
Okay, thanks very much.
Let's give it up for our panel. Let's hear it for our great moderator, Roger Royce.
And for our host, Rob.
Just stole my thunder. So let's hear it for our event team, our video team, and our audience. So check out the video on our YouTube channel, youtube.com/idea-the-IPO. It'll be up in a few weeks. Our panel will stick around. You can hang out with them. Feel free to take some pizza home. Thanks for coming. We'll see you next time.